Run us through the kind of sense you're making of the markets at the moment. We know that it's really stretching out to 2010 highs for now, but on the back of still low volumes.
Thank you very much, Alishia. It's an honor to be here. That's a good observation there about the market. You're seeing an all-time high performance in terms of the NSE 20 and a lot of activity, especially on the financial front, as well as some of the industrial counters like Kenya Power and Lighting. We are almost crossing the Q2 or the half year of the financial year, and basically we are seeing a lot of speculative activity, especially on some of the financial counters. And because of that, it's a bit of a risky trading environment that you're operating in, especially noting what you've said there about the political scenario, the upcoming referendum, as well as the June budget and government action in terms of what you're seeing in terms of the price controls.
Also, we've seen for the past while quite an interest being directed towards the bond market. Now, comment is that we're starting to see a shift back into riskier assets to the equities front. So ahead of that, what kind of shifts are you anticipating as we progress?
That's a good observation. Basically, we've been seeing a bit of flight to safety in terms of investor interests, and basically looking at it in terms of the broader perspective, we've been seeing a lot of liquidity inflow in terms of the market environment, and mostly because of the stability that we are seeing. Also, tourism, agriculture, the fact that they have been relatively stable. We are seeing the economy behaving as if it's really steady as at now, and also on a rebound. And because of that, a lot of investors are having a risky appetite in terms of approach towards return on investments. And because of that, we are seeing a lot of liquidity flowing in, and because of that, we are seeing a lot of interest, especially in equities, and banks are positioning themselves very well to be able to take advantage of that.
Certainly, news has been encouraging on some fronts as well. As I mentioned earlier, we had Safaricom announce yesterday that it intends to acquire 2 ICT firms in Kenya, and we were speaking about this yesterday with the broker that I chatted to, saying that this further cements Safaricom's intention to just cement itself in terms of data capacity and the capability of that bringing in profits moving forward. The market certainly reacted positively. We saw that share price up close on 1% yesterday. What are you making of that news?
Yeah, thank you, Alishia. Basically, looking at Safaricom, especially noting the recent developments in the ICT sector, we've been seeing a lot of concern, especially because of its dominance in the market. But what is so clear about Safaricom, and we have been observing basically in terms of their strategy, is that the Safaricom, first of all, is very well positioned in terms of its capital base to expand. And looking at the ICT environment that you're operating in, we still have a lot of ground for us to be able to still develop a lot of developments in terms of teleconferencing, in terms of ICT, and because of majorly that, you're seeing Safaricom being able to take advantage of the opportunities that are already there in the market, and the fact that it's already expanding and acquiring some of these ICT outfits basically positions it very well to be able to diversify and also be able to still be able to continue dominating the market.
Yep, well, certainly some analysts out there forecasting that Safaricom is now set to target 12-month highs of 6 shillings 10, so we'll be tracking that share price most definitely. In the meantime, ScanGroup as well out with its JV news as well. Still, the market seeming to be running nicely on the back of that news. We've got ScanGroup's share price having traded close on 2% to the good by the close of yesterday's session, also touching an all-time intraday high at 38.50. I mean, what's your outlook for ScanGroup moving forward? Because it's all this corporate activity at the moment that seems to be igniting interest and directing investor attention that way.
Thank you very much. Basically, looking at ScanGroup, it's been one of the stocks which have been relatively stagnant for quite a while at the 26 shilling mark. And this new development, especially the merger with Ogilvy, basically positions it very well in terms of the African region, and also in terms of how it's going to be able to clinch some of the corporate deals in terms of the marketing. And because of that, basically it has created it to be a stock which means investors are really looking up to. And hopefully you're going to see it being able to bring turnovers as well as volumes because of performance. Otherwise, the fact that the share price has risen significantly is a bit of a concern now, because it's almost like most of that has already been factored in, and the challenge for ScanGroup now is to be able to bring in the numbers.
We've been focused very much so on some of the local news, and that's been affecting the market activity we're seeing. Let's stretch it a bit further and look at some of the unfoldings in the global arena, and how that's set to impact. Samuel, I mean, we've seen the appreciation of the yuan, speculating to have far-reaching effects on the Kenyan economy, raising the cost of Chinese imports and increasing public debt burden as well. I mean, where we've had a situation of Kenyan manufacturers having to shield away, from or shield their domestic market and their capacity in that, in that region from cheap goods from China. What impact do you see this having on their businesses moving forward?
Well, thank you very much, Alishia. Basically, looking at it in terms of the macroeconomic environment, well, the strengthening of the yuan basically is going to be able to encourage our exports and be able to still boost in terms of our performance. And looking at the production cost, basically the competitive edge that we've been seeing, especially in terms of industrial output, basically is going to be able to be favorable in terms of their competitive edge. But one of the major concerns as of now is to see how that effect is going to really affect in terms of the yuan, in terms of how it performs, because looking at it in terms of the macroeconomic environment, basically it's one of the things which might have a bit of knock-on effect. And as of now, most of our industrial producers are basically very, very positive, and the sentiments are already good that basically our production is going to be favored.
One would have to assume that they'd have to be on their toes still, though, because any substantial loss in business will see Beijing take deliberate steps to actually reduce their price margins even further of Chinese goods in order to retain somewhat of a market share. How much of a challenge do you see that being?
That's definitely going to be one major challenge, because looking at China, especially in terms of their exports, it's one of the markets which has been very, very strategic in terms of their growth. And I'm certain that for them to be able to come up with such a strategy, they must be having an objective which they are driving at. And that should make most of our industrialists be a bit cautious in terms of how they approach the change and the shift. And because of that, just as you've noted there, they need to be a bit more cautious in terms of how we manage our production costs, how we even up in terms of the kind of quality of product that we produce, and even how we strategically position ourselves. And the challenge now is to see how we can be able to still tap some of the markets that China has been able to take advantage of.
Let's take a look at Kenya Airways now. It rallied 1.5% yesterday. Quite a turnaround from the performance we've seen this share price put on over the last couple of weeks since its results announcement. Is there a view out there that 20% correction we've seen on that share price may well be a bit overdone, Samuel?
Thank you very much. Basically, Kenya Airways has been one of the counters that has also been a bit of interest, especially in terms of the performance of the airline industry. Looking at it from the global perspective, the airline industry has been one industry that has not been very, very, very strong. But looking at Kenya Airways in particular, you've seen that stock doing excellently well, seeing it rise from a low of 23 earlier on in the year to almost 64. And where it is at the moment, it was some sort of correction, because it seems like the market had really overreacted to the news of the World Cup impact on the performance of the Kenya Airways, as well as the results which are now already public knowledge. And because of that, we saw a bit of investor sentiments in terms of exiting and profit taking, and we saw it settle at the 46 mark. And just as you noted there, a bit of demand came in yesterday, but it might not be that certain. It could be more of investors who are still feeling that the stock it might still be underpriced. And also some of the investors are looking for it to be able to take advantage of some payouts like the dividends and such, and also positioning themselves for their next year performance of the stock.